Okay, so you are all welcome once again to another edition of the Smart Forex Trading Course with Dr. Harmonics. As you know, my name is Dr. Harmonics. 15 years experience on the market, and um, this course, okay, sir, we are not hearing you, please. Um, please make sure you check from your end. Guys, let me know if you can hear me. Guys, let me know if you can hear me. Okay. So, Lukman, make sure you check from your end. I told you activate your mic so that you can hear me perfectly. Okay. 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 So this might be the last Smart Forex Trading course for the year. So make sure you absorb as much as you can absorb. Make sure this will be the beginning of your Forex career. Okay. So make sure you pay rapid attention to this so that you can also start your Forex journey the right way. So as I told you, I'm the CEO of Gold Forex Institute, one of Ghana's leading Forex institutes and one of the oldest and biggest Forex institutes in Ghana. Currently, we are only offering online session and one-on-one session as to tete-a-tete. So those who tell me about the classroom say, yes, we have an ultra-modern classroom, but we don't do it for group courses because most of the Ghanaians prefer online. So we decided to do it online instead of the classroom. But if you want one-on-one, we also offer one-on-one session, as in only you. Yeah. So basically, that's it. This program was proudly sponsored by FBS, Forex Brokerage Service, FBS. FBS is one of the leading brokerage services in the world, okay, with over 300 asset classes to trade from and over 100 deposit and withdrawal options. You have the best broker of choice, which is FBS, to open your Forex account and start trading, make money out of the market. The market is huge. The market is over $6.6 trillion in transaction daily. So it is up to you as a smart trader, as part of the MOP gang, to make your dollar from the market. Forex is very easy to learn, but very difficult to master. That is why you need a very good mentor to give you the basis, to give you the right startup, the start right course to be able to navigate through your Forex journey. Okay. For me, if you don't learn anything, you learn experience on the market. You learn what it takes to move from nothing to having one of the leading Forex institutes in Africa. So just stay glued to your phone or your laptop. Make sure you have a note where you'll be jotting down information, gather your questions. As and when I open the forum for you to ask questions, you ask questions. This session would last between 1 hour to 2 hours. So make sure you have enough time. Make sure you have your popcorn, you have your fruits, your make sure you don't get drunk in the course of the course. Okay, so make sure you are very much relaxed because I'm going to navigate you to see the different aspects of Forex trading, have a very good foundation of your Forex journey. Now, so this course, with this course, by the end of this course, we should be able to get certain things out of this course. So I've told you who am I, Dr. Harmonics, the experience I have. I've been in the industry for over 15 years. I used to be an investment and commercial banker, decided to go full-time as a trader, okay? So by the end of this course, you are going to understand the entire overview of the market. You'll also be able to know how to open a Forex account and also use proper risk management. So you understand risk management, you understand trade management, you'll be able to use the basic candlesticks formation on the charts. So all the things that you see on the chart, all the ups and downs on the chart, you'll be able to understand the candles. They are called candles. So you'll be able to understand the meaning. You'll be able to analyze the market with the classical charting, the classical chart patterns formation that actually forms on the chart. Okay, then you'll be able to use different forecasting tools, okay, to identify the market confluence when you should execute the trade, okay, and you also be able to forecast the market direction using this forecasting tools, okay. So just stay glued to this so that I can give you the best. This thing, I think I've already spoken about it. Okay, now you ask yourself, what actually is Forex trading? What is Forex trading? What is Forex trading? Okay, I think let me use, guys, excuse me, let me use this. Okay, let's use the same thing. Let's use the same thing. Okay, so you ask yourself, what is Forex trading? What is Forex trading? Yes, let me know your answers. What do you think Forex trading is? Someone said buying and selling, okay. Please drop your answers in the dialog box. What is Forex trading? What do you think is Forex trading? What do you think is Forex trading? Kelvin says basically foreign exchange. Kelvin says basically foreign exchange, exchange of one currency for another. Okay. Exchange of one currency for another. Okay. Yes. Someone says the exchange of currencies. Frimpong says buying and selling currencies. Buying and selling currencies. Okay. Okay. Well, again, Yakubu says exchange of foreign currency. Now, the foreign exchange market, which is commonly known as Forex, is basically a global financial market for trading currencies, commodities, indices, etc. Okay, so the FOR, okay, the FOR in Forex means foreign, okay, and the EX means what? Exchange. The FOR in Forex, okay, let me join this. Yes. Okay. So the FOR in Forex mean foreign, okay? And the EX means exchange. So the foreign exchange market, which is commonly known as Forex, okay, is a global financial market for trading currencies, commodities, indices, etc. Now, this market averagely has over $6.6 trillion in transaction daily. Okay, so every day, over $6.6 trillion is traded on this big market. Now, the market is actually opened 24 hours a day, okay, 5 days in a week. That is, it is open on Sunday at 10 p.m. and closes on Friday at 10 p.m. That is when there is daylight saving. That is when there is daylight saving. Okay. And on normal normal days is Sunday at 9 p.m. Okay, which is open and closes on Friday at 9 p.m. Okay. So that is all about this Forex market. Okay. So basically, let's look at who are the Forex market players. Who are the Forex market players? Who are the Forex market players? Now, we have one, which is what? The super banks. Now, who are these super banks? These super banks basically are typical large commercial and investment banks, okay, that provide market quotes to these bigger clients. So you can even go to the Ghana Commercial Bank or Zenith Bank and tell your bank that you want to pay your school fees at Harvard College. Now you go in and pay Ghana cedis, and you tell your bank that they should pay your school fees of £5,000 on your behalf. That transaction is also Forex trading. So these are the super banks. We also have hedge funds. Now, hedge funds, these hedge funds, they employ traders like you and I, who actively speculate in the Forex market. Okay. So there are also some hedge funds that execute trades automatically with on algorithm basis. Okay. So basically, hedge funds, they employ traders who speculate the market or analyze the market and make trading decisions on behalf of the clients of these hedge funds. Okay, so these are hedge funds. They are like investment houses, okay, big investment houses. Now we have multinational corporations. So these multinational corporations, they are companies which are not in the business of trading Forex. No, they are not in the business of trading Forex. Now, what they do is that they typically hedge and manage currency risk that arise as a result of the fundamental commercial activities. So what do we mean by they are not in the business of Forex to make profit? They are rather in the business of Forex to hedge against interest rates. So for example, I am an importer of toys from China. So let's say I'm an importer of toys from China. Um, so, so let's say I'm an importer of toys from China. Like I import toys from China, especially in December. Now, in October or in September, which is 3 months away from December, I decided to buy toys from China at a price of $100,000. Now, the $100,000, let's say currently, the rate for a dollar is, let's say $12, 12 cedis per dollar. Now, in December, you don't know whether the price of the dollar will go up or it will go down. So you make an order, you use what we call you do a commercial paper, or you tell your bank to do a letter of credit. So what is letter of credit? Letter of credit is basically you authorizing the bank to make certain payments on your behalf, especially when you make purchase of goods and services outside. and you don't have the money at a go. So the bank comes in, do a letter of credit for you, instructing the international corporation that, okay, you have the money with us. So we, the bank, are saying that we are standing in as a guarantee, saying that ship those goods to this person in, let's say, Ghana or Nigeria. We, the bank, which is, let's say, Standard Chartered Bank, once the goods is on its way, you provide us with a pro forma invoice, and we are going to send you the money as and when you ship the goods. So that is letter of credit. It's just like a loan to the individual from the bank, but it's a form of guarantee. Okay. So the multinational corporation, once you purchase the goods of, let's say, $100,000 to from a Chinese company at $100,000. Now the rate at that time could be, let's say, $12, 12 cedis per dollar. Now in December, you don't know whether the rate of the dollar will go up or it will go down. Yeah. So when the goods arrive in December, remember you bought it at 12 cedis per dollar. In December, when the goods arrive in Ghana and you want to sell it because it is Christmas, people buy toys, there is high demand for toys and knockout and other stuff. Now, when you are selling it, or in December, when the price move from $12 to $15 per dollar, 15 cedis per dollar, it means that even though you've not sold the items, automatically you have even made profit on the transaction because you bought it at 12 cedis per dollar. Now the dollar is like 15 cedis per dollar. It means that even before you even sell the goods, you've already made some profit because the current market price, you sell the things at the current market price, and the current market price is 15. So automatically you've made profit on the transaction. Now, on the flip side, guys, a minute, guys. Okay, so on the flip side, yeah, on the flip side, if so we said that in December, if the price shoots to 15 cedis per dollar, it means that before you even sell the items, you've already made profit on the transaction. Now, what if in December the price, the CD to the dollar, it reduces from 12 to 10? Already you made a loss on the transaction. So the role of FX trading is that when companies buy huge items, or they import goods from China and other countries, because of the fear of the currency risk, they would contact the banks to do what we call hedging. Okay, so when they buy items of $100,000, they are going to go to the bank and also place a sell of $100,000. So it means that they will change the cedis to dollar to purchase the goods from China, which that is buying of the dollar. So they will go to contact the banks, and they will do hedging on their behalf by selling the dollar. Okay, so they will sell the dollar on the trading platform. Now in December, when the price shoots to 15 cedis per dollar, in forex trading, when you buy and price goes up above the current price at which you buy, you make profit. When you sell when you sell at the current market price and the price goes below the current market, let's say you sell the USD to the dollar at 12 cedis per dollar, and the price in December, the price goes to 10 cedis, you make a profit. But when you buy and the price goes above the current price or the price that you bought, you make a profit. If you buy at 12 and the price goes to 15, you make a profit. If you buy at 12 and the price goes to 10, you make a loss. Okay. Now, if you sell at 12 and the price goes to 10, you make a profit. If you sell at 12 and the price goes to 15, you make a loss. That is how forex trading is. So the difference between forex trading and crypto is that with crypto, you buying the coin, you only wait for the price to go above the price that you bought it to make a profit. But in forex trading or in the retail space, we speculate the prices. So we make profit by either buying or selling. Just like stocks, the stock market, you make profit when the stock prices goes up. But when we are trading stocks on the trading platform or on the retail space, we make profit by either buying or sell. So if we expect the stock prices or the share or the price of the share to go up, we buy, and when it goes up, we make profit. What we expect the price of the share or the stock to fall, we sell, and when it goes down, we make profit. But the natural or the traditional way of buying stocks is that once you buy at a current market price, you wait when the price goes down, you want to sell it. When someone buys it, that is where you make your money. When the price is going negative and nobody buys it, you will still lose your entire value of the share. Okay, you only make profit when it goes up. But in forex trade, you make profit either ways, either by buying or by selling. Okay, so in this space, when in December, when the price goes up to 15, because you bought it, you make profit on the transaction, but you lose on the trading platform because you sold. In December, when the price falls, you lose on the transaction, but you go and make profit on the trading platform because you sold. Okay, so it is not for profit motive, but it is, I mean, they trade forex on the platform to hedge against currency risk. So that is the role of multinational corporations in FX trading. I hope it's well understood. If you understood it, just type MOP. If you really understood it, just type MOP. If you understood it, just type MOP. Yes, I want to see more MOP if you understood it. Okay, nice one, nice one, nice one, nice one. We can see about 60 people here. Make sure you remain here till Wednesday or Thursday that we finish. I know that by tomorrow it will drop to 30, it will go to 20. We'll end with 10. Okay, so it's a journey. Not everybody will complete the journey. Now, we have central banks. What is the role of central banks in forex trading? So the role of central banks, now who are central banks? They are basically financial institutions that oversee and manage the currency of, let's say, the respective countries. Okay, so what they do is that they maintain the reserve and can intervene in the forex market to defend or weaken their national currency as and when it deemed appropriate. Okay, so these are the roles of the central banks. Now, how do central banks regulate? What's the role of central banks in forex trading? Okay, so basically, the role of central banks in forex trading is to use FX trading to regulate or to regulate inflation. Now, what is inflation? Let me see your answers. Inflation. Let me know what inflation is. What is inflation? Drop your answers in the dialog box. What is inflation? What is inflation? Yes, yes, yes. What is inflation? What is inflation? Let me know your answers. I want to see whether there are brilliant students here. What is inflation? What is inflation? Someone said, so Isaac said 5, inflation. I don't know what he means. 5, okay, increase in price. Emmanuel says increase in price. Kelvin says upsurge increment in goods and services. Okay. Upsurge increment in the prices of goods and services. That will make more sense. Okay. Jacob says is the persistent rise in the general price of goods and service. This is the definition for the 1990s. Those who went to SS in 1990 and 2000s. Okay. A general and progressive increase in price. Okay. Felix, Adisi says inflation is the rate at which the general level of prices for goods and services is rising, leading to a decrease in the purchasing power. Hey, I swear, Felix, you went to Imperial Secondary School. I swear. Okay, Calvin says in the price. Okay, so Apple says increase in price of goods and services. Isaac says general increase in prices of goods and services. Okay, Zoom says I'm the only one who can't hear. Zoom, make sure you activate your mic so that you can hear me. Ayuba Abubakar say is how much a service or goods is measured over the time. Okay. Isaac says an increase in general level of prices. That's right. We saw people who went to Infantsipim, people who went to St. Peter's, my proud school, St. Peter's, St. Peter's Boys Secondary School. Nigeria, what's the best senior high school in Nigeria? Please drop your the answer over here. What's the best senior high school in Nigeria? For Ghana, we can know the best senior high school in Ghana, which is St. Peter's. St. Peter's. Okay. So what's the best senior high school in Nigeria? Let me know your answer. Or we have only GSS graduates. What's the best senior high school in Nigeria? What's the best senior high school in Nigeria? Or more? Nigeria, one state alone, they say. Okay. In Nigeria, Redeemer College. Redeemer College in Ghana is like they are no more. It's collapsed. So someone says Joabe. Okay, no problem. Ayalolo JSS. Okay, increasing price. Okay. So the central banks, how do the central banks use interest rate to control inflation? Now, with interest rate, there are two things involved. Okay, so with interest rate, when you went to SS in the 2000s, okay, you say that inflation is when a lot of money is chasing fewer goods. A lot of money is chasing fewer goods. That's the definition when you went to senior high school in the 2000s. A lot of money is chasing fewer goods. Okay, so when there is a lot of money chasing fewer goods, or when there is a lot of money in the system, it turns out that and the demand is higher than the demand of goods and services. Let me give you an example. During the era of the nose masks, what happened? The demand for nose masks was so high that even with your money, you cannot get nose masks to buy. So what happened was that they had to increase the price of the nose masks. Survival of the fittest. If you have money, buy it. So that is basically inflation. Okay. So when there is a lot of money and there's shortage of a particular product, it turns out that the purchasing power increases. Okay. So it causes inflation. That means that they have to shoot the prices up so that people who have enough money or people who really need it that much can actually buy it. And that causes inflation. The other side is deflation. When there is no money, but production is very, very high, it causes deflation. Okay. So when there is inflation, it means that there is a lot of money in the system. So the central bank then comes in to find a way monetary policies that can actually help to regulate the inflation. So with that, they tend to increase interest rate. Now, how does interest rate help to control inflation? Let me give you two examples. So when the central bank increases interest rate, which is the prime rate, so the central bank or the Bank of Ghana, the Bank of Nigeria, they would set their prime rate, then the banks would then adopt the prime rate, add a margin, and they call it what? The base rate. The way I'm talking, you know that I have a banking background. So I will give you the practicality of everything that you want to hear. Okay, that's why I'm telling you that what you learn is experience. So I'm not giving you the skill of trading, but I'm giving you the practicality, what happens at the banks. Yeah. So the central bank will set the prime rate. Okay. Then the banks would add a margin to it, and they call it the base rate. The base rate is the basis of lending and how do you call it? So the borrowing and the invest, so the lending, the investment and the loans. So the base rate sets the basis for the rate at which they lend or return on investment. Yeah. So when interest rate goes up, it affects two sides. It affects the lending rate, okay, and the return on investment. So when we come to the government space, the lending rate goes up and the rate on investment also goes up. Okay. Now, when interest rate goes up, rate on loans tends to go up. That means that it will prevent people, because rates will be high for loans, it will deter people from taking loans from the bank into the system to buy more goods and services, because there's already money in the system. So the government is finding ways to push money to the bank so that the money will leave the system to regulate inflation, so that inflation, goods and services will meet the money in the system. Okay, so they are finding ways to move money to the bank. So rather, they will increase rate. When they increase rate, rate on investment tends to go up, rate on lending tends to go up. So loan rates will go up, which will deter people from taking loans from the bank to come and do business. And investment rate will go up, which will also help people to go and take money, to go and invest at the bank. Okay, so when there is inflation, once they increase rate on investment is high. So instead of me going to take loan at 10% per month or 40% per annum, I'd rather go and invest my money at the bank and get that 40% per annum with no risk, because it is assumed that the treasury bill has no risk, zero risk, because it's by the government. So I'd rather go and invest so that I'll be able to make returns on my money rather than going to do business with a lot of risk. Okay. So that is how they push money to the bank. Now, when there is deflation, the central bank will reduce rates. When they reduce rates, what happens? Investment rates will go down, loan rates will go down. So it means that people will now have loans at a cheaper rate, push it to the system, or go and buy goods and services and sell, because there's no money in the system. So they have to reduce rates so that loan rate will be cheaper for them to go for loans and come and buy goods and sell, so that people cannot get money to their pocket. Now, investment rate will be very low, so it will deter people from investing at the bank, so that so people will rather not invest, rather they'll go and purchase goods and services to sell, and thereby they'll meet the high production of goods and services in the country. Another option which a lot of mentors don't talk about is the bank reserve ratio. Now, what is the bank reserve ratio? The bank reserve ratio is a quota at which the bank, or it's more like a percentage at which the bank should always keep for panic withdrawal. Okay. So let's say in total, a bank, let's say the bank has $4 million, Okay, 4 million, let's say $4 million in its reserve, okay, which is 100%. Now, maybe they are supposed to use 50% of the 4 million for everyday withdrawal, which will be $2 million. Now, 30% should always be kept at the bank for panic withdrawal. So 30% of this, so let's do some calculation. 30% of I love calculation, guys. So 30% times guys, give me something. Give me the answer. So let's say 30% times 4 million. That's 1.2 million. Yeah, that would be 1.2 million. Okay. So let's say 1.2 million. Now it will be left with 20%, and 20% goes out as loans. Okay. So this one will be loan. This one will be the bank reserve, and this one will be everyday withdrawal. Okay. So 20% of 4 million will be 800,000. Now, so when there is inflation, the central bank will tell the bank, all banks should increase their bank reserve ratio to, let's say, 40%. Okay, it will tell the banks to increase their bank reserve ratio to 40%. So now let's look at 40% times the 4 million. That is 1.6 million. Now, it means that this one, the one available for loans will be 10% only. So the 10% times the 4 million will be what? $400,000 for loans, which is not enough. Now, it means that there will only be 10% of the 4 million available for, because this one will be static. Maybe this percentage will be static. Now, the bank reserve ratio is always static, 30%. So, and the loan, the one available for loan is 20%. Now, because the central bank wants to move money because there is inflation, the central bank wants to move money from the system to the bank. It will tell the banks to increase their bank reserve ratio from 30% to 40%. And that means that 40 plus 50 is what? 90%. It will be left with 10%, which will be available for bank to give out as loan. Now, banks make their money only from loans and service charge. So if 10% is only available for the bank to eat small on it, it means that the bank has to do a lot of promotions and other avenues, to find other avenues to increase their deposit. So let's say they increase their deposit. So they will do back to school bonanza. They will do a lot of promotions and other stuff to increase their deposit. That means that if they increase their deposit to, let's say, 8 million, okay, it means that even though this one is 10%, because they've increased their deposit, their total money available will now not be 400,000. It will now be 800,000, even though it is 10%. Okay. Once they've met the policy set by the central bank, they will then reduce the bank reserve ratio from 40 back to 30. And this one will now move to 20%, which will now be, let's say, 1.6 million. You get it? So they put down restrictions on the banks so that the banks will also find avenues for people to do a lot of deposit, to increase their deposit level so that they can also get a lot of money to give out as loan, because banks thrive on only loans and service charge. Okay. Now, the next one is what we call the retail forex market. Now, you, I, and everybody over here, you are retail forex traders. You are potential retail forex traders because you are now learning how to trade on the forex market. Once you gain the skill of analyzing and trading on the forex market, you become a retail forex trader. There is another one called the introducing broker. Gold Forex Institute, myself, we are introducing brokers. We have gotten the skill, and a broker has partnered with us to give you, for example, this tuition for free. This one is worth $250. We are not charging you anything. It's free for you because a broker has paid for it. And it is incumbent on you to also, definitely you need a broker to trade after this course. So instead of choosing a broker, we are giving you a very good broker so that you can trade with them while they're giving you free tuition to also trade on the biggest platform. So that is how we become introducing brokers. Okay, so online forex brokers are the banks that you would tend to open your account with them, fund your account, and they will give you access to the market to be able to speculate the movement of price and make profit on the forex market. Any question so far? Any question so far? If you really enjoy the class, just type MOP. If you think the class is interesting, technical, just type MOP. If you really love the class, just type MOP. Good, 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 good. MOP, Eric says MOP, Maxwell says MOP, David says MOP. Oh, David, you can now hear me. Okay, Malik says MOP. Nice one, nice one. Vanti still says MOP. Rafael says MOP. This means that a lot of people are really enjoying the class, and I'm proud to be your favorite mentor. Okay, so let's continue. Now, what is actually traded on the forex market? What is actually traded? I wanted to show you the two types of brokers, the technicalities, but don't worry, we would get into that. Yeah. What is actually traded on the forex market? The simple answer is money. Okay. So think about forex as buying a share in a particular country. So let's say you are buying shares in the United States economy. So the strength of the currency is a direct reflection of the strength of a currency is a direct reflection of the strength of the economy. So assuming you see the United States economy performing well, and you expect it to perform better in the ensuing future or in the near future, you tend to buy the currency against currency of a weaker economy like Ghana. Okay, if you anticipate the Nigerian economy to be stronger against the pound economy, which I doubt, against the UK economy, which I doubt. Okay, so you buy the Nigerian currency against a weaker currency, which is the United Kingdom currency, which is called the pound. Okay, so that is what is traded in the forex market. Now, let's look at the advantages. Okay, let's look at the advantages of forex trading. What are some of the advantages of forex trading? Individual control. individual control. What do you mean by individual control? Individual control. What do you mean by individual control? Now, the fact is that nobody, no bagger wire would come and hold your neck, Hey, buy. If you don't buy, I will jail you. No. No broker will come and tell you that come and buy. Otherwise, you will not go to heaven. It's a lie. It's a lie. So you have control as to when to buy or sell a currency. Okay. Now, the market is 24 hours a day, 5 days in a week. From Sunday, market opens on Sunday or and closes on Friday at 5 p.m. So Monday at 9 p.m. closes on Sunday at 5 p.m. When there is daylight saving, it opens at 10 p.m. on Sunday and closes on Friday at 10 p.m. Free demonstration account. So all brokers, including FBS, once you open your live account, you can have access to a demo account where you can use it to practice until you are sure of your consistency, then you move to live. But for me, I don't believe in demo. Why? Because I believe that it is good to fund your account big, but rather reduce your risk. So if you fund your account well, but you reduce your risk to, let's say, 0.5%, 0.2, you see, all this kind of percentage, for you to be testing your strategy, so that you have you get the ability, or you feel that anxiety, that adrenaline that goes through your system as a trader when your heart will be moving from the left ventricle to your right. Hey, Charlie, science, you know. So that your heart will move from the left to the right. Okay. When you place a trade, you see someone $5, $2, then they had to be jumping from the left to the right, from the left to the so you need to have that adrenaline. Okay, as a trader, you need to have that adrenaline, that you need to experience it. So rather, you can deposit bigger but reduce your risk to the minimum, so that once you see, one thing is that once you're able to master with a live account, okay, once you're able to master with a live account, see, let me tell you something. Forex is about trading more quality trades and risking less. People don't understand me when I say you should trade more. You see, I feel like when you trade more, I'm not saying any trade that you get, then you place it. No, I'm talking about quality trades. And what are quality trades? Quality trades are trades with less risk but high reward. So let's say 1:5, 1:4, 1:3, 1:10. These are low risk to high reward. These are quality trades. You understand? So you rather deposit more, so that you can have that leverage to be doing proper risk analysis. Okay, so that you'll be able to do position sizing. You'll be able to reduce your risk but maximize your returns. Now, you make mistake. Let me give you an example. Let me show you. Let me show you how Forex works. Okay, if you follow proper risk to reward ratio. Now, let's say you have 20 trades, yeah? 20 trades. Your first 20 trades. Now, let's look at something. You are taking trades, quality trades that is giving you only 1:5 risk to reward ratio. Now, that means that any trade that you lose, you are losing 1% of your money. Any trade that you win, you are winning 5% of your money. So you are looking for trades that are giving you at least 1:5 risk to reward ratio. So let's say trade 1. 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, trade 2. So let's say 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So I meet a lot of people who say that online session, people don't catch up with. What don't you catch up with this? I mean, what is so different between this and the classroom? I give you the opportunity, ask any question. See, as I'm talking now, you can ask any question that you want to ask, and I would respond. Okay. Pertaining to whatever we are doing. So let's say trade 1. Let's look at trade 1. So trade 1, loss. Trade 2, loss. Trade 3, loss. Trade 4, loss. Win. Loss. 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 Win. Loss. Loss. Win. Loss. 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 Win. Loss. Loss. Win. How many losses? So if you lose 1, 1, 1, 1, 5%, 1, 1, 1, 5%, 1. Okay, 1, 5, 1, 1, 1, 1, 1. Sorry, 5, 1, 1, 5. So you lost how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 out of 20 losses. Even if you close your eyes, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. You can even make 5 wins. Okay, you can even make 5 wins. Yeah. Someone is asking, what's the meaning of daylight saving? So the time, yeah. Sometimes like UK like this, there can be a time where they can go 1 hour ahead of us. Okay, but we are in the same time zone. So that's daylight saving. Okay, so let's say 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is 15. So that means that your total loss is 15%. Now let's look at the win. 1, 2, 3, 4, 5. So 5 wins, which will give us 25%. 25 minus 15 is what? 10% in total. So 10% profit. So even though you lost 15 out of 20 trades, okay? So the same patience that you see your trade hit your invalidation point to close in a loss, you have the same patience to see your trade hit your profit target, okay? Once you do that, you are going to, and assuming you have 15 losses out of 20, it means that you are risking 1% on each trade and targeting at least trades that will give you at least 1:5 profit. Yeah. So 15 out of 20 trades in a lot, you still be profitable 10%. That is why risk management is very, very important. Position sizing, we call this position sizing. So there is a tool that I ask you to download, which is the position size calculator or the Forex calculator. It is used to calculate your risk against your potential reward. It's very, very important. So once you do that, you'll be able to know how much you even lose before you even enter the market. Okay, so if you think your potential loss is too high, then you reduce your risk so that you are not exposed to the market and your heart to be beating. There are some people, they'll place a trade 2 a.m. Then they will be holding their phone like this. They'll be holding their phone and they'll fall asleep. I swear, if I were to be your wife, I'll slap you. You don't need to be holding your phone. If you're swing trader, you don't need to be holding your phone whilst you are sleeping. all of a sudden around 3 a.m., then they would just get up like this. Then they'll be like, see the distance from them getting up and going to check their trades, whether they are in profit and loss. I swear, they are hard to move from their left to their right before they will even open their phone and check. Please, are you a swing trader? Yes, I'm a swing trader. You understand? So it's either you become a day trader where you sit behind your PC all the time. I don't have that luxury of time. So you can be a day trader. At the end of the day, you close your trade, whether profit or loss. Or swing trader, where you set your risk to your reward. You know that in the worst scenario, this is the amount that I want to risk. Okay. So it's either I hit my stop loss or you go and hit my take profit. And you go and sleep soundly. The worst scenario, if you hit your stop loss, you know how much you are losing. Okay. So that is how swing traders trade. Day traders, they'll be sitting behind their PC and the scalpers are the papa traders. I swear. They enter the market 5 minutes. One news, they'll be like one news. Most scalpers are news traders. So they'll only trade during news. They'll set it. They make like huge money. They are out of the market. But if it goes against you, I swear, you would also laugh at the wrong side of your mouth. So we have scalpers. We have scalpers. Within 5 minutes, they're out of the market. I have a lot of questions and inquiries for you, doctor. No problem. Okay. Okay. So I love swing trader. Yes, I'm a swing trader. Okay. Okay. So let's see. Okay. So we have transparency in the information provided. So brokers in utmost good faith would give you all the necessary information to become a trader. But you see, those information are not enough for you to become a profitable trader. That is why you need a mentor like myself to be able to take you through the journey so that you get the rhythm and the right way to search for probably you becoming a profitable Forex trader. Okay, so Forex is very easy to learn, but very difficult to master. That's why you need an experienced mentor to be able to take you through the journey on becoming a profitable Forex trader. Okay. Now, we have wide option of asset classes to trade from Forex, from currencies, commodities, indices, stocks, cryptos, and a lot of asset classes. FBS has over 300 asset classes. Even on weekends, you can trade crypto and what? Crypto, because I saw XRP repo. Yes, you can trade crypto. I think it's crypto. You can trade crypto during the weekends on FBS platform. Okay, you can trade crypto on weekends, and you can also make withdrawals on weekends. It's very, very fast. Okay, reasonable cost. Now, the cost being charged by brokers are very, very minimal. Okay, there are some brokers that they don't even charge like whatever cost you incur in transferring your money to. Sometimes they even dash it to you. Okay, so the costs being charged by broker, like the spread and other stuff, are very minimal. What is a spread? So the spread is basically the fee charged by brokers for placing a trade. Okay, the difference between the bid and the ask price, like the buying and the selling price. It's just like going to the Forex Bureau. You buy the dollar at 12 cedis, and let's say you buy it at, let's say, 15. They will buy it from you at, let's say, $12. Yeah. Then they would also sell it to someone at $15. Okay. So the difference of $3, it's their profit, and that is called the spread. That is called the spread. Okay. Okay. Now, profitable gains. Now, forex can be profitable. It can be highly profitable. You can make your first $10,000. You can even use, let me show you something. Okay, let me close. So I want to show you something. I don't know if you can see it here. This is a live account. You can see my name at the top. It's Luis. You can see it over here, Luis Boa. I want to show you something. Let me cover certain points. It's a live app. Let me cover certain points so that I'll show you something. I don't want you to be seeing certain things. Okay. Yeah. Oh. So I want to show you is this. You see, this is just a small amount in it, but it's a live account. So you can see it over here. Oh, it's a small account. It's just $42 in it. This is a live account. It's just $42. But I want to show you something. Look at this. This, oh, I don't know if you can. Okay, look at this. Let me see. Okay, look at the deposit. Look at the deposit. The deposit is how much? Look at the deposit. Oh, I can still show you. If you think it's not, I can still show you. You see that it's opening. Look at the deposit. The deposit is one, yes. And look at the profit. The withdrawal. Look at the withdrawal. What is the withdrawal? 19,584. Yeah, $19,000. So it means that 9,000. That's over how many percent? That's over 1,000%. Yeah, almost. Let me see. It's more than 1,000%. So 10,000 is 1,000%. So 19,000. 19,808 divided by 1,000. That's 1,984%. Okay. So it's forex can be profitable, but there are also situations where you can also be in a loss. Okay. So you need the right mentorship. You need the right mentorship. You need a lot to be profitable. You need a lot. This is a synthetic account, so you need a lot to be profitable in forex. That's why you need mentorship for me to also upgrade your skill. High liquidity. Forex is very, very liquid. Forex is very, very liquid. Now, unlike stocks, where until someone buys the shares, you will not be able to have access to your money. Forex, the moment, guys, a moment. Okay, so Forex, Forex, the moment you place a trade, the moment you close a trade, you have your money. There is nothing like someone should wait for someone should pay before you have access to your money. No, the moment you place a trade, you close your trade, you have your money. Okay. Okay. So careers in forex trading. Now you can be a retail forex trader. Like you and I, you are a potential retail forex trader or investor. I am already a retail forex trader. You can be a proprietary fund manager. That means that you can have access to proprietary firms where I can recommend some proprietary firms for you so that you can have access to. The reason why people, for a beginner, I don't encourage you to go into proprietary firm because you'll be losing your money. The rules are too thick. You need to build yourself before you can do proprietary fund management. Now, you can be a forex signal alert provider where you can have access to, you can also give trade signals like signal service. So a forex signal alert provider is someone who is able to analyze the market and give market commentary, tell you as to when to buy or sell at a particular price. Then you are going to pay the person a fee monthly for that service. Introducing broker, like my institute, we are introducing brokers where we provide introducing brokerage services to you guys, introducing you to our recommended broker, FBS, okay? So that we partner with them. FBS pay us for a service, then we would also introduce you to them by giving you the best education as possible. Now, Forex analyst, you can also be a Forex analyst for brokerage, for Forex institute, for banks and other institutions, where you'll be able to analyze the global financial market with technical and fundamental tools so that you'll be able to work with them as a Forex analyst. You can also be a resource person for news and other agencies. You can also start a YouTube channel where you can talk about Forex trading, you can teach people about Forex trading, and there's so much money you can make as a Forex trader, not related to Forex trading alone. There is a business aspect of Forex trading that people don't know. So once you become part of the elite MOP gang, I can also introduce you. Most people don't come to me to learn those things, but I can always introduce you once you get to the elite zone. Okay. Forex tutor, you can also be a forex tutor where you can train people like I do. Okay. I have a lot of people who have done my STL strategy course, my advanced course, where they can also teach people. I have a lot of people who have graduated and they are doing well. I see them with my 2 eyes. They are doing very, very well. Yeah. So you have a Forex expert advisor programmer where you can also code your strategy in a robot and the robot to be trading for you whilst you are doing your other stuff. Okay. So some things to consider when choosing a forex broker, there's security. Now, there are different stages of security. Like FBS, we have Tier 1 regulation. Tier 1 regulations are those from the UK, which is the Financial Conduct Authority, from Cyprus, which is CISEC, Cyprus Securities and Exchange Commission. Okay. Now, you should also look at how can one get that robot? Oh, my friend, you have to I'm talking about the fact that when you have the knowledge, you can also learn how to code. We have in-house person who can help you learn how to create a robot. Okay, so he can either create a robot for you based on your strategy, or you can learn how to code yourself. Someone is saying, please, are you on YouTube? Yes, I'm on YouTube. I'll drop my YouTube link so that you guys can also subscribe. Subscribe. It's Dr. Harmonix. Okay, I'll drop my YouTube so that you guys can subscribe. Subscribe. Okay. Let me see if I'll find my YouTube channel. YouTube. Okay. Let me see. Okay. Are you staying in Accra? Yes, I'm staying in Accra. Okay, this is my YouTube channel. Please make sure you subscribe to my YouTube channel. I have my YouTube. It should be something that we can just. Oh, this is not it. Why is this my YouTube? Oh, that is not it. Sorry. That's not it. But at least you'll be able to. I'll drop the YouTube channel in the WhatsApp group so that you guys can. I'll close very soon. By 8:30, I should close, or um, I'll close very soon. Okay, so let's see this. Okay, I think. Okay, I think this is my YouTube channel. This is my YouTube channel, so make sure this is my YouTube channel. So this is my YouTube channel. Please make sure you subscribe to my YouTube channel. This is it. Make sure you subscribe to the YouTube channel. Just click on the subscribe button. Click now. Click now. Please click now. Click on the subscribe. Click on the subscribe. I'll drop this video there. This first video, I'll drop it there. So click on subscribe. 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 Click on subscribe. 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 Okay. Subscribe will pop up. Just click on it. Okay. Okay. So a good Forex broker should have good deposit and withdrawal options. Trading platform should be user friendly with the necessary tools to keep you profitable. Execution speed should be very, very fast. FBS currently has less than, I think, 3 milliseconds execution speed. They have less than 3 milliseconds. Customer service, top notch. Okay, so that is what you get with FBS. Make sure sign up with FBS. Okay, how to open your Forex account. So once I give you the links I've given you, just click on it, select your account type, which is the dollar account, USD, register with the information that is requested, then upload your ID to activate your account or verify your account. Simplicity. Okay, assessment. Now, let me know, guys, what is Forex? What is Forex? What is Forex? I want to know whether you understood. What is Forex, guys? What is Forex? Forex is foreign exchange. Calvin, thank you. What is Forex? Guys, what is Forex? Every session will give you an assessment. So you should have that rapt attention over here. What is Forex? Guys, only Calvin was here. Refers to the global marketplace where currencies are traded. Barton says foreign exchange. Faris says buying and selling, trading of currencies. Zoom says buying and selling. Zoom user says Forex is exchanging of foreign currencies. Eric says changing one currency for another. Eyitayo says foreign exchange. Oyekuli David has now been able to listen to me. It's a global financial market where currencies, commodities, and indices are traded. Samuel says exchange of foreign currencies. Apple says exchange of currencies. Yakubu says exchange of foreign currency. Isaac says the buying and selling of currency pairs. So these are the people, these are the only people here, and they are listening to this session. Thank you. What are the advantages of Forex trading? What are the advantages of Forex trading? Is the buy and sell, Emmanuel says the buy and selling of a global financial market. Are you talking about Forex or? Okay. What are the advantages? Kelvin is always the first to answer. Individual control. Okay. Individual control. Kelvin says individual control. Felix says free demo account. Isaac says profit motive. Eyato says, okay, increase in liquidity, 24 hours. Okay. Increase liquidity. Atanga. Oyikuli David, the guy who says he could not hear me, but now he hears me more than everyone. 24 hours. Zoom says for profit motive. Henry says 24-hour. Emmanuel, deposit and withdrawal. Deposit and withdrawal has done what? Reasonable cost has done what? Raphael. Reasonable cost. Explain. Someone says profit making. Reasonable cost, good. Deposit and withdrawal, plenty. Okay, good. Infinix Smart 5 says free demo, good. Eric says to make profit, good. But I didn't talk about the loss. Okay, provision of leverage. Perfect. That was not part, but you added it to it. Bless. Thank you very much. Provision of leverage. So the leverage, what is leverage? Leverage is being provided by brokers to help you magnify the size of your account. For example, if let's say you have $1,000 in your account, so when you are opening the account, they tell you to choose leverage. So if let's say you have $1,000 in your account, okay, you deposit with $1,000, and when you were opening the account, you chose 1:200. It means that 200 times 1,000 is what? 200,000. Now, in the olden days, 1,000 would have given you access to a maximum of 0.01 lot size, which is 1,000. Yeah. Or yes. Now, because of the introduction of brokers, retail brokers, you are giving leverage of 1:200, which is 200,000. 1,000 with leverage of 1:200. You can do transaction of 200,000, which is equal to 2 lot size. Now, the standard lot, one lot is 100,000. Okay, so 2 lots will be what? 200,000. So leverage helps you to magnify the size of the account. We'll get to there. We'll actually treat leverage when we get there. Okay. Oyenkuli David, you want to ask a question, yeah? Okay. Oyenkuli David, you can ask a question. Oh, David, raise your hands again. David, kindly raise your hands again. David, kindly raise your hands again so that I'll allow you. Okay. Okay, David, you can ask your question. Just deactivate, just unmute yourself and ask the question, David. Okay, Zoom user, you can ask your question.
Hello.
Yeah.
Please, how do you set the stop loss and take profit?
We've
That's
not
the
gotten
difficult thing.
we've not gotten there. When we get there, I'll show you.
Okay.
Okay, thank you. Um, any other question? Any other question? Okay. Okay. So who is a forex signal alert provider? Okay. Oyenkuli David say, how do I start as a beginner? You've already started. You are learning forex. You will get to the practical aspect. Okay. Take your time. Abotre. A Ghanaian will say abotre. Take your time. You get there. Okay. Please say how much is your mentorship? The mentorship is what I'm taking you through. So this one is we have tuition. So we are teaching you and it's free. Okay. Maybe the advanced one, then that one there, you pay something small, but this one is free. The beginner session, you've already started. Okay. So for a signal alert provider, these are independent individuals or companies that specialize in providing forex signal alerts. Henry, you went to a good school. Someone who is able to analyze the market, provide trading signals, okay? Isaac, a forex analyst who provides signal service. Okay, forex analyst is a signal alert provider. No, it's different. It provides forex trading signals. Please, among the careers, which one is best for beginners in order to earn profit? All of them are good. Someone who analyzes the market and provides signal individual. Okay. Give signals for okay. So what are some of the major stakeholders of the market? What are some of the major states? Central Bank, Mohammed, Kelvin, this time Mohammed has passed you. Kelvin says super banks. Henry says multinational corporations, central banks. Jacob says, I love your mentorship. Mauli, hedge funds, super. Jacob says super banks. Job says central banks. Banti says hedge funds. Nice one. Nice one. Okay. You've not said or you not even say retail traders. You and I are retail traders. You not talk about brokers. You not talk about, you see, you've forgotten about you being a retail trader. Okay. What documents are required in opening a forex account? What documents are required in opening a forex account? Hey, Gabby says a broker account. Okay. This question is for us. Calvin wanted to be fast. Is there a broker account? So which valid ID? Okay, let me see. Calvin, the broker account. Okay, bank statement, manually. Okay, hedge fund. Okay, Baba, Atanga, Baba to open a forex account. How do we use Baba? Okay. Zoom says valid ID card, ID card. Okay, ID card. Your ID and bank statement, yes. National ID card, residential address. Okay, ID card, address verification. No problem. What are some of the deposit and withdrawal options for funding or withdrawal from your FBS account? Yes, FBS. What are some of the deposit and withdrawal options from funding or withdrawing from your trading account on FBS? Crypto, okay. Calvin. Eric says Momo. Crypto, Momo. Oh, mobile money. Mobile money. Okay. Jacob, bank. Hey, Rafa say Paga. Oh, Rafa. Okay, Paga. I don't know. You are not in. Okay. You are not in this country. I don't know of Paga. Online transfer. Okay. Rafa says Paga. Paga is what? It's like mobile money. Rafa, Paga is what? Mobile money. Is it electronic currency or what? Emmanuel says online transfer. The Nigerians are not talking. Paga is in the northern part of Ghana. Paga is oh Calvin. Paga Crocodile Pond. Okay. Okay. I'm a Nigerian. Okay. Okay. Zoom says Nigerian. Raphael, what is the Paga? Paga is a town in the northern part of Ghana. The only real crocodiles. You see crocodile playing with human beings over there. That's a Paga, especially children. They can kiss children. You can feed them. That's Paga. Okay. So what is Paga? Raphael, what is Paga? Is it electronic currency or what? Okay. Okay. Now, I think he's not ready to talk. So let me see. Okay, so we'll move to chapter 2 tomorrow. Any questions so far? But if you really love the class, just type MOP. If you really love the class, just type MOP. If you really love the class, just type MOP. And I'll drop the YouTube channel in the group. Make sure you subscribe. If you really love the class, just type MOP. Tomorrow the same time, guys. Tomorrow the same time. And the same link, okay? The same link. Yes, the Forex account, there is the link in the WhatsApp group. Make sure I'll send the link again to the WhatsApp group. Okay. So guys, I have questions. Okay, Zoom, raise your hand so that I would unmute you for you to ask your question. No. Raise your hands in the distinct chat box. Like just use the hand gesture because I can't. Let me see. What's the best app to start with? All the apps that I sent to the WhatsApp group, you need them. Okay. Zoom, what is your listing? Zoom user. Okay. Zoom, I've activated you. Zoom, you can talk.
Hello, can you hear me?
Yeah, I can hear you.
Good evening, sir. Me personally, I really appreciate the class and I enjoy it. So, I'm from Nigeria. I'm a Nigerian. So, my question is this: you sent some app on the group, that FBS app. I was unable to download it on my phone. I don't know, maybe it's working only on Android because I'm using an iPhone. I can't
Which
find
one?
the FBS.
The FBS app.
Yes.
No, you should be able to.
It's directing me to the web.
Oh, it's the one the one I sent to the one I sent to is iOS.
It's iOS. I was unable to download it. I check it on App Store. I can't find it there.
Go to the
That's
go
my
to the go to the FBS the website.
okay.
You see the downloadable apps. You see the one for iOS.
I did the same yesterday. I did the same.
Check your phone. Oh.
And another question is this. Can I go on?
Yeah.
Okay. You mentioned, although I came late to the class, but you mentioned about the retail trader,
What?
and then you mentioned about retail
Retail.
traders.
Yeah.
So I want to know the difference between retail traders and then SMC trader.
See, don't be deceived. Oh.
Okay.
Smart money concept was
Yes.
developed by an individual. There are so many strategies. You don't need smart money concept only to become profitable in the first market. Smart money concept is one of the new theories which was developed by someone who has also studied. It's just like a strategy. So we have different theories. We have Elliott waves, we have harmonics, we have smart money concept, we have ICT concept, inner circle trading. We have
Yes.
Wyckoff theory. There are different concepts. My strategy, the STR, I combine the SMC, the Elliott waves, and harmonics together as one strategy. Okay, so I combine both three. But don't be deceived that SMC traders are institutional traders. It doesn't work. See, it's just an idea that has been inserted into people's mind that is never true. Those SMC traders, do you know what happens at the banks? Banks use 200 moving averages, and banks are not complicated like that too. They have a lot of liquidity to withstand. They forecast like 1 year, 2 years, and you are using your SMC that you are using as a day trader to trade like the banks. How is that possible? SMC is a strategy, it's a theory, just like the harmonics, Elliott waves, and the rest. Even SMC and ICT concepts, they are almost the same. Okay. They are almost, see, all the theories are almost the same. Oh. All the theories are, so don't be deceived that SMC trader is not a retail trader. You are using $100 to trade, and you are telling me that you are using $100 to trade an SMC strategy, and you are saying you are not a retail trader. $100, you are trading like the banks? No. SMC and ICT, as someone is saying, they are twins. They are basically the same. They are just strategy. They are theories. It's not so much different. For me, I use SMC in the execution, but I use harmonics for the bigger pattern, and I use Elliott waves along the legs of the harmonic patterns. So my strategy is called the SCR strategy. It's a combination of 3 or 4 theories together. But SMC is just, and even the harmonics, the originators of the harmonic pattern, I have found some loopholes, and I've even upgraded it to a level where the P of the harmonic pattern should be formed as a result of change of character using SMC. So I've been able to use SMC to identify certain loopholes in harmonic theory. So these are theories created by individual, and once you master, you can also create your own. You can also find some flaws and be able to create something that will suit you. So don't be deceived that SMC traders are institutional traders. Forget. It is never true. They are all retail traders. It's just a particular theory. Okay. So forget.
Thank you.
Yeah. Okay. Any other question? Any other question, guys? Any question? Any other question? Bless. Yeah, Bless.
I say, please. During the session, I hear you talking about scalp trading and string trading. I want to know the meaning of those things.
Oh, okay. We would get there. We've not even gotten there. That's why but scalpers are basically pa. Do you know pa? Sharp.
Yeah, that one, yeah.
So like 5 minutes, most of them are news traders. Like they will wait for a particular news then to place the trade within 5 minutes. When the trade news comes, it moves once, they're out of the market. So they normally use the 1 minute and the 5 minutes time frame. Let me show you something. They normally use this one. So news traders, they normally use oh, ah, so news traders, they normally this thing is going to my direction. This is Elliott waves. Okay, so this Elliott waves. I want to show you something. This is harmonics. This is harmonics. So this is harmonic patterns. So this is harmonic patterns. Okay. And what you saw earlier was Elliott waves. Oh, you can see. Did I say they can't see? Okay. Okay, so this is harmonic patterns. These harmonic patterns. And this is Elliott wave correction. A, B, C, D, E. This is a triangle Elliott wave correction. A, B, C. You see, TradingView app, you see that he brought in patterns, XABCD pattern. There is Elliott wave, but you don't see a smart money concept unless you go to indicators, which was created by individuals, SMC. That's where you see smart money structures and fair value gaps and all those things. Look at it. So these are fair value gaps. Okay. So change of character, change of character, break of structure, all these things. Okay. So this is where it gets now. But the how do you call it? The traditional trading view, you have harmonic patterns and Elliott wave in there. This should tell you that harmonics and Elliott waves are very, very good theory. A lot of mentors in Africa don't use harmonics and Elliott wave because they think it's quite complex, but it's not complex. Even harmonics is even less difficult than smart money concept. Harmonics is very, very, this one is very, very easy. This one. This theory is very, very easy. See, it's very, very easy than this theory is very. So I'm expecting it to go to maybe this level by December 25th. By December, it should hit this level. Okay, and drop. Then before going up. Yeah. So I combined. So the legs of this, I used earlier too. You can see that I've drawn something over here. Okay, you can see I've drawn something over here. These are smart money. This is smart money. This is an imbalance over here. Okay. Then it drops over here. So there is break of structure over here. You can see it. It moved back to a demand zone. Then it pushes forward for an impulsive move. Okay, so we combine all these Elliott waves and smart money in it, and we use the harmonic patterns to be able to find the legs of the movement. Okay, so harmonics is used to get the overall trend, and we use Elliott waves and smart money within the legs of the pattern. And that's my strategy, STR strategy. I'm a swing trader, but I can use this on lower time frame. So you see, scalpers, they trade on the 5 minutes time frame, okay, and the 1 minute time frame. So between the 1 minute and the 5 minutes, that's where scalpers trade. Okay. Wow, see this. So scalper will do this. Scalper will do this. Okay. It's looking for the fair value gaps. Even smart money. A scalper will do this. Okay, so he's expecting that it will continue on the buy to break the resistance here as it's doing this. So he will just set something like this and buy here. Okay. He will buy at this current price. Put the stop loss maybe here at this price as the invalidation point. This price means that that's a scalper. Maybe 1.0943 as a stop loss. Then you will target maybe target maybe here, because he's expecting it to break the resistance as it's breaking. You see, it's breaking here. So this one did not break. It comes that he's expecting it to break. So he will do this, and when he puts his so when he puts it here, that's 1:4.56. Okay, 1:4.56. That means that it's risking 1% and trying to make like 4%. Or you can even put it here, 1:3.81. That means that it's risking 3.81. It's risking 1% and targeting 3.8%. Okay, so he plays the trade. Once he gets here, he exits the market. This 1 minute, within like 5-10 minutes, it's ended. Then it's out of the market. That's a scalper. So the scalper will execute the trade here on 1 minute. So once he breaks, he enters, and that's it. Now, a day trader, he looks at the 4-hour as the trend buy. They will come to the 15 minutes to look for entry. Okay. Or maybe 15 minutes to look for entry. That's what or 5 minutes. Okay. So you will be looking for this thing and place a buy. That's how a day trader would think. Then a swinger would go to the daily and the weekly time frame. See that the day is a buy. So you come to 1 hour to look for a potential entry. So he cannot enter whilst he's going up like this. So all you do is that he will wait for a pullback like this. Okay. Then he can join up to follow the bigger picture, which is the daily trend, which is a buy. Okay. So that is the differences in, so the time frames determine which, and whether you leave your trade overnight and others determine the kind of trader you are. Okay. Okay, guys. Any other question before we bring this class to an end? Okay, so if there are no other questions, okay, go back. I should go back. I should go back to what? Go back. Eric, I should go back to what? Okay, let me go back. Eric, I should go back to it. Eric, I should go back to it. So the time frames there, these are the time frames, minutes. So you see, one of we've not gotten there. I don't want to confuse you guys. But if we talk about the 1 hour, yeah, you see this 1 hour, this candle form me over here. 1, 2, 3, 4. This 4 candle will form the average, will form one of the 4-hour candle form me over here. Okay. So this 1 hour candle, this 1, 2, 3, 4. The 4 candles form one of the 4-hour candles. Okay. 30 minutes candle. This one and this one of them, the two of them will form one of the 1 hour candle, which is this one. So you see that this is a sell, then along here there is a green. So it will form this. When it gets here, the wick will go here on the 1 hour. Okay. So when you come here, it will form red, and the wick, the green that is forming on the 30 minutes, that is what has left the wick over here. So you can see that there is a small green that is forming, helping to form the wick over here on the 1 hour. And that's it. Okay. So that's basically it. It's fractal in nature as and when it goes. You trade news. Hey, more we'll get there. We'll get there. Okay. Okay, guys. Why don't you start with the answer to every question tomorrow now when you start the class? Okay, so Eric, remind me, Techno, remind me once. Yes, so I will start the time frame. I'll teach you about the time frames when we start tomorrow. Okay, so thank you very much for being in this session. I hope it was crystal clear. Make sure you subscribe to the YouTube channel. I'll also drop the link in the WhatsApp group. My name is Dr. Harmonix, your favorite mentor, and see you tomorrow for another edition. Peace out.